Okay, on today's show, 3 questions. Number 1, what's behind gold's new all-time highs? Number 2, what the heck is happening with Apple? And number 3, Mercury is in retrograde. Should you be worried about your investment returns? Let's go. And welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Victoria.
And I'm Rabih.
Guys, 3 weeks in a row. I hope people don't get sick of us by now, but this is just how it works sometimes.
Us? Never.
Never. Spring break, so we've had a lot of people out, and so we got the dream team back together again, 3 weeks in a row. Victoria, you want to share with the people where you are? We're all in different locations. Well, I guess Rabih and I are at the same location, but Victoria, where are you?
Yeah, I'm in Scottsdale, Arizona, and we'll be at shared practices for the next couple of days. So I just met a few of their folks, and we're excited just to kind of meet with everyone and talk about Dentist Advisors and all of that. So it'll be great. And I get to enjoy the nice weather here instead of Salt Lake.
Yeah, although it is very nice in Salt Lake the last couple of days, but it's like, what, 10 or 15 degrees warmer down there. So
it was like 85 degrees yesterday. I was thriving.
So nice.
I'm a desert lizard all the way.
Yeah, that's awesome. Shout out to Richard Lowe. We love Richard and shared practices. Richard's actually going to be speaking at our event here in a couple months. So excited about that. Huge announcement. We're going to hit this really quick. I don't even know if you guys know this or that I was going to do this. This show we are doing right now is our 500th episode.
Ooh.
Whoop, woo!
500. So so it's not going to be released probably as number 500. Maybe it will be, but it's our 500th show we've actually produced and made. So we're going to be doing another kind of like big show around this on the main show, but we at least wanted to give a shout out to guess us.
I was like, where are you going with that?
I guess us. Yeah. Let's just call it what it is. We're giving us a shout out. 500 episodes is pretty amazing. So
yeah, it's something to be proud of.
We've not been canceled yet, which is saying something. Yet people still listen, so we're doing something, I guess, decent. So I just think it's cool, and we're also nearing 1 year of doing 2 cents. That'll be in about a month.
Can we wear little birthday hats for that recording?
Yeah, we'll do something special.
We'll bring back the sound effects just for one episode.
Oh yes, we will.
Robbie's letting you. Now it's on the air.
Hey, we're
Happy
gonna
birthday!
We're gonna do that for the 1 year. I love that.
We'll get sashes, birthday hats. I hear body glitter's making a comeback. So
I've heard. Okay, what, body glitter was ever a thing? What do you mean making a comeback?
Yeah, it was like an early 2000s thing, and now it's like it's all the rage.
High people, or
I don't know, Matt. Don't knock it till you try it. So.
Okay. All right, let's jump in. Rabih, what is behind gold's new all-time highs?
Yes, and it's China. This is the short answer.
Okay,
move on. Okay, so
and now Matt.
Topic. I'm just kidding. Well, it is China, but also like in the macro space, this year has a lot of geopolitical risks. Like we've got 2 wars happening, and this year, I don't know if you guys know the statistic, there is going to be 64 countries participating, at least 64 countries participating in a general election, which means there's going to be around 2 billion people around the world heading to the polls and casting their vote. If, there's one party dominant across all countries, this will actually make a change of how, global affairs are being run around the globe. So, and with that, a lot of central banks around the world have been stashing on gold. And the biggest of them all has been the Chinese Communist Central Bank. I needed to put communist there because it's like a central bank and I don't get it. But the People's Bank of China bought more gold than any global central bank last year, purchasing a net of 225 metric tons. And that is the biggest expansion of their gold reserves since 1970. So there are more reasons, and we'll get to them, but this is the main one. It's just that the Chinese central bank has been trying to up their reserves in a sense to balance their monetary policy. Last week, we talked about the US. We talked about how the stock market is high, and a contribution of those are because the economy is growing, and another contribution of why the stock market did so well in Q1 in the US was because of multiple expansion and hype around AI. Jumping to the other side of the world, and mainly China, it looks a little bit more gloomy. That Chinese economy hasn't really recovered well since a recession. Just to give you like a quick summary, when COVID was happening, the US decided to keep the economy opening and let people work from home, risking that COVID numbers will spike up. Whereas China decided to shut down the economy, lock down every activity. And the result of each of these policies was very interesting. It's like a good economic experiment. US had to deal with inflation while China had to deal with a recession. And although they've had interest rates very low, they never participated in this, year and a half journey where central banks around the world were increasing interest rates. They kept their interest rates low. China was actually pumping money into the economy, helping with the real estate crisis, helping with their energy shortages. The economy was still not able to bounce back, and it's like kind of in a below trend growth for a while. Given that, and given the change in the interest rate regimes between the two countries, the Chinese yuan, which is the Chinese currency, vis-a-vis the dollar on offshore trades, actually has hit the lowest point ever. So historically, and just to give you a reference, usually $1 US buys you like around 6.5 yuans. It has gotten to 7.2, and the highest it's ever been was like 7.35. And that was earlier in 2023. So the currency is the lowest it's could ever been. So from the perspective of the Chinese consumer, I'd rather not hold my own country's currency if I plan to travel, if I plan to spend money outside. Also, the economy is in a recession overall, and the Chinese stock market hasn't really been performing well. And this is why emerging markets for like the last couple of years have been having a bad reputations. Like, are emerging markets still a good investment? Well, they are, because China isn't the whole emerging markets. You've got like superstars like India and
So it's just a large part of it.
it's just a large part, and it has been underperforming. So year to date, China is still like down 3-4%, where compared to the US, because this is our base, the US is up around 9% just year to date. So the fact that your economy is struggling from a recession, your currency depreciated vis-a-vis global currencies, and your equity market is not really providing you with that store of value in a sense, a lot of Chinese have been flocking into and buying golds through like either spot ETFs or actual physical gold. And this is really why gold has been going up, because along with like, general sentiment that central banks around the world will start cutting interest rates later on. So what increases the price of gold? Cutting interest rates. But it also increases the value of stocks and bonds and everywhere across the board. So there are macro trends that justify for why gold is going up high. And this debunks all the other, rhetorics about just the US not being able to deal with inflation. And we saw it a month and so ago when Bitcoin was also reaching all-time high. Now it crashed back from 75 to all the way down to like 60 again. And while gold maintained its all-time high levels, and now it just secluded gold at the top, which debunked all the other ideas like, oh, it's gold and Bitcoin, equity markets are to be pushed down the drain, markets are not functioning correctly. No, it just happens that due to a clientele shift in expectations, aka China, due to central banks shoring up gold because of global, socioeconomic, political risks around the world, they shoring up gold for currency hedging. All of these reasons are what's allowing gold to stay high. It's not something to be actually worried about. And this explains it. And this actually, I think, if I want to leave you with something at the end, what makes it so interesting is that we usually say, hey, if you want to diversify portfolio, you should, some people say you should have gold in your portfolio. Some people say you should not have gold in your portfolio. It's so interesting when gold actually performed well. It's now performing well because from the perspective of the domestic investor in China, there's no alternative but gold to put your money in. And that's when gold is actually good to their portfolio. But from the perspective of what American investors have experienced, I don't know, in the last decade when we had a really good bull market, gold wasn't the top performer. You would have been better off if you didn't have gold in your portfolio and you were just in equities, right? So in normal situations, gold, even in like recessions, gold might not be your safe haven, given that other asset classes might act as your safe haven. When a recession happens, fixed income is going to act as your safe haven, and because central banks intervene, cut interest rates, float the prices of bonds. So it's only when there's no other alternative at all is when gold actually plays the good diversifying role that it does. But unless there's at least one other asset class, the role of gold being a diversifier is significantly minimalized.
Yeah, we've talked about this before, right, Rabih, in the sense of these narratives around gold or commodities, Bitcoin, I'll put in that category as well. The narrative of them being like this direct inverse relationship to things like inflation or the stock market, that's been debunked time and time and time again. I mean, and look no further than right now, the gold being almost directly correlated to what's happening in the U.S. market. Both are hitting all-time highs. There is no relationship that you can see over time. Like there's spots, right? There's spots you can look at, but I think what you're highlighting here is the factors of what's driving gold up right now. Like anyone that's investing in gold right now would not be able to, most people, I should say, would not be able to point to what you just did of saying, okay, here's the reason why gold is at an all-time high. Like you have an actual explanation for it, but most of the time it's hard to anticipate that. Commodities are pure speculation in most cases, right?
Yes.
So just something to... Oh, yeah, go ahead.
Yeah, and most of the time, the reasoning for why it should be in gold is just like, because you have this fear-based contrarian perspective that, oh, everything is going to blow up, and here's why we just should go to gold because everyone believes it's a store of value. Is it? Like, we got to a point where it's really hard to have everything blow up, and you'll always have another safe haven that it's actually income producing. It's not a commodity than what gold can offer.
Yeah, and that's actually a really good point to finish this up with, which is people might see gold all-time highs. I'm sure, if not already, I haven't looked, but I'm sure already there's the classic headline of like gold, highest it's ever been since 2008. And so people are I'm waiting for emails here pretty soon of like, should we be investing in gold, or does this say something about what's happening in the market? And to your point, I love that you're explaining like, no, there's a distinct reason. It is a foreign actor, investors in China investing in gold. You've laid out all the specific reasons. It doesn't always have to be this narrative of gold is an all-time high. That must mean something's going on with the market. Like it's actually
the U.S. economy is as the strongest it's ever been.
Yeah.
The fact that gold is an all-time high does not mean that this is an indicator that something is bad is happening in the U.S.
For sure. Yeah. Okay. Victoria, any thoughts on gold?
Just a lot of questions.
I just saw a thing about this would be something you'd like, Victoria. Something about gold and Costco. Can you buy gold at Costco?
You can.
You can buy like bars at Costco. I saw.
Yes.
Oh, can you? I mean,
Yeah.
that doesn't surprise me. You can buy anything at Costco.
I mean, truly, that if you didn't think that before, when I saw that you can buy literal gold bars at Costco, that's pretty wild.
It's a 1 ounce bar, so it'll track what the price of gold you'll see on the ticker, and like if the ticker of gold is showing you 2,200 and I don't know $85, this is how much that gold bar is gonna cost you at Costco. Plus, I guess a spread from their end.
I'm sure.
But you can go buy it for an ETF without having to pay Costco. So
Yeah,
I don't get
yeah.
the difference.
But I
then
mean,
then
the
you're
fact
gonna
that
go to
you
Costco.
bought it from Costco, like I would happily pay that premium knowing where like I sourced it from.
Honestly,
right?
if you can get a $1.50 hot dog, you should be able to get a gold bar.
For those of you that don't know, for some context here, the reason we're bringing this up is because there is no bigger fan of Costco than Victoria.
Yeah,
So-
it's me. I did have like a 15-minute conversation with a client just about Costco.
Makes sense. Totally makes sense.
I mean, I feel like I'm kind of curious, like if somebody, I wonder if there's like a research study on this, but I wonder if you're the type of person to like see headlines like that, like with gold and whatnot, if you like tend to like perform worse in your portfolio because you're more likely and more susceptible to like market timing and whatnot.
Oh,
So
for sure.
yeah, I'd be curious to see if anyone's done any research on that.
I'm sure that is the case. Definitely. Okay, great, Robbie. That was awesome. I think sheds a light on things beyond just gold and how to approach these things and not to get caught up in the narrative. So, okay, next, what the heck is going on with Apple? We were going to hit this a couple weeks ago. We didn't have time, but I'm sure by now most of you have heard at least some level of what's happening with Apple. And we want to talk not only what's kind of give an overview of what's happening with Apple, but also talk a little bit more about the principle of business specific risk and the impact of why we always say our stance is 99% of people should not be picking individual stocks. And we'll talk about what we mean by that. So quick overview of this, though, if you've heard, so the U.S. Justice Department and then 12 other states, no, more than 12 states, like 15 states, have filed an antitrust lawsuit against Apple. And they're basically just saying they've monopolized the smartphone industry. Haven't we known this for a while? I guess is my first question. Like, is this...
Like, hasn't this been true for like 15, 20 years?
Yeah. That's how I feel.
Death to the Android. I do have feelings about that.
Okay, well, we're going to get into that. So I think the main thing, just to highlight, we don't need to go into great detail, but I think kind of the overview here is they're talking about how they've used their app store, how they've basically pushed other makers, if they're not like Apple specific apps, Android was mentioned in these articles, basically making it really difficult to be on their app store, even things like how other technologies integrate with Apple. I mean, hell, how their own technology integrates with its own technology. If nothing
Right.
else comes out of this other than they stop upgrading their every 2 years, what plug goes in where, like, they're monopolizing even their own and making it hard for their own technology as they're,
Right.
forcing you to buy and upgrade different things. So I guess we'll stop here. So Victoria, you said you've got some thoughts on this. I guess let's just get kind of out there of like your thoughts on this antitrust lawsuit in general, if you have any.
There's two sides to this, because one is like, yeah, that makes sense. They have been dominating the space and making it really difficult and changing their own technology. So I have to buy different wires every couple of years.
Just annoying.
It's annoying. But then at the same time, if you have an Android, why?
Just why? Just why? Yeah.
Like, my opinion of you definitely changes a little bit if you pull out an Android.
Oh man, we're gonna get in trouble now. We're gonna calling
I
people
might get
soft. We're
canceled.
calling people out for Androids. Although I think most people that are listening to this probably have an iPhone, so it's probably not a big deal.
Yeah, so it'll just make our following even stronger. Like, I think every listener can agree with me there.
Yeah, Robbie, do you have strong thoughts on Android?
No, not on Android, but on antitrust.
Yeah, let's hit it.
I think a bit of an important distinction should be made between antitrust issues related to products versus antitrust issues related to platforms. So no one's going after Apple and telling them, hey, you can't create your own USB-C specific for Apple that you can only use it. We got rid of the headphone jack. The charger is this MagSafe, whatever. No one's telling her your products can only work with your products and you are trying to push away competition. I think the issue with Apple is you created a platform, a marketplace where it's supposed to be, and when we say marketplace in a free market country like the US, like everyone coming to the marketplace are there free to make a decision or not on a purchase, whether it was a buyer or a seller. So when you are responsible for a marketplace like the Apple Store, you should not be, favoring your own vendor versus other vendors in the marketplace, because this goes against the idea of a marketplace that's equal and fair for all. So
That makes sense.
Yeah, between a platform versus a product, the antitrust conversation is completely different. Go ahead.
So to that point, I think this is where one of the main kind of points of this argument come in of like whether whether you agree with this or not, right? I think so to this platform arguments. So Apple maintains a 30% commission on its any sale through any app on its platform. So a lot of these companies are saying that are trying to create these apps and sell subscription-based models through these apps on their platform. They're basically saying there is no other viable platform. Like Apple has kind of dominated the platform, so there's no competitive landscape to like drive those commissions down, and Apple is just like owns the market. So I think that's what this whole kind of things comes back to is, and I'm not saying I agree with this, I'm just saying this, the argument's being made, right, is that because Apple owns the platform, there's no other viable platform. I guess Android's the only other one, really, and I don't know the numbers on this. I probably should have gotten this of like how much of the market. I know in the US, Apple dominates the market.
Yeah.
Different worldwide, but in the US for sure. So I guess I'll say this. I understand that argument of saying there is no reason for Apple to adjust its commission on sales through the App Store. There is no competitive landscape to actually force them to drop that. And so because these companies are like, Apple's basically the only platform that's viable to even sell an app. So that I do understand that argument.
Yeah, I agree. I feel like I'm glad that you distinguished that, Rabih, like product versus like the actual marketplace, because I can agree with that. But then like on the product side of things, it's difficult because like what if the people want it? Like what if that's just like the demand? And so like what do you do there?
You're saying people just want
Apple products, right? Like so you're gonna make laws to make it. I don't know. I feel like why it's not a bad thing that people want Apple products, right? And so
I don't think I'm with you. I think the problem or the reason we even have antitrust lawsuits in place, and that I will say the history of this, especially since big tech has like taken over, it's become really difficult, to Rabih's point, to distinguish between product versus platform. I think that's why a lot of these, there's been attempts over the years to like fight these big tech companies. But I think the reason antitrust laws are even in place in general is just to maintain a competitive landscape. So to your point, Victoria, it's like, well, people may want it, but if it's the only option because the company has taken over the entire market, and there's no competition out there, I don't know if you could even make an argument that people want it. It's the only option that's there.
Oh, sure. Yeah.
So
fair point.
I think that's kind of the whole point of these antitrust lawsuits, but
yeah,
they have battled and failed so far. That's why I'm kind of interested to see how this goes.
Right.
Because so far there's not been any successful, there's really been no success against these big tech companies. They kind of, like, you name the top 7 tech companies, there's been no success against them.
Right.
Rabih, you got thoughts? You're thinking here.
Yeah, I still don't have the idea in mind, but I'm trying to think of other industries where a company came up with a platform and how that created, tension with the pre-existing products, etc. The only example that comes to my mind is the case of Uber and the New York taxi drivers. If you guys remember that thing, because pre-Uber in New York, taxi drivers had a predetermined fare, for how many miles you drive or how many people in the car. Like, it was predetermined. The market had its rules for any time you want to get a yellow cab in New York, and it was just up to each personal driver who decided to like rent a car or buy a car and do business on it to make money according to the effort that they're gonna do. And they're gonna be, if they're gonna go to like more traffic prone areas or work in hours where there aren't other cars working, they will go out there and make more money. But the field is a fair, square playing field vis-a-vis other yellow cab taxi drivers. And then Uber came over, and they were like, we are not going to follow that. We're going to follow our own pricing mechanism that depends on, surge demand, prices of gas, and available drivers, right? And that Uber changes their price according to what time of the day you are ordering. Yeah. And the fact that they decided to come up with a different terrain to play on is what caused the conflict. And well, it hasn't been really resolved. In some markets, Uber decides to leave, which happened recently I think in Boston. I'm not sure. I'll correct it on the next episode if I'm not mistaken. But like, it's not viable for us to compete anymore. So Uber like decided to leave the market. In other markets, Uber just takes the upper hand over the local taxi scene and does better. It's gonna be evolving, and depending on really like the viability of whether you can do business for all parties will determine how this goes. Like, yeah, a lawsuit is there, but it's gonna really, business is what talks at the end of the day. And if the companies can't make money, they're just gonna leave, I guess.
Yeah, it's a good point, and it comes back to what Victoria was saying. The balance of like innovation and giving people what they want, and the conveniences that are created from technology, and then also on the other side of like what is this doing to the competitive landscape. I think Uber is a great example there. Rabih.
Yeah, I feel like we could have a whole debate on like how much government should have their hand in business.
Totally. Yeah, and I think last thing I'll say on this, again, we always teeter on the edge and walk on the eggshells around the political environment here. We'll continue to do that. Oh, Rabih, what do you got?
Oh, I just Googled it. I really needed to like make sure I'm correct. It's happening by May 1st. Uber and Lyft are leaving Minnesota, not Boston. So
Minnesota. Okay. There you go.
Wow.
Yeah, and I know this has happened in other countries outside the U.S. with Uber, and similar thing. Obviously, different laws and things that they're battling, and what they've done to the taxi industry and all that. So yeah, we could totally debate. There's another example here of like, for something like Amazon. Like, has Amazon been a net positive or a net negative? Kind of for the same reasons of what it does to mom and pop type shops,
right?
But also like the massive amounts of work it's created and jobs it's created, and also like entrepreneurs it's created through its platform. So There's always a balance here. But what I was going to say is the political environment, and that's why this year, as the year progresses, it's just going to get more and more wild with stuff like this, because I can't help but think every move like this, every single thing that's happening, is politically driven from one side or the other, right? Yep. And again, not taking stands on one side or the other, just saying that I can't help but think, okay, this is election year. Something's happening. There's motivation here. Someone's positioning themselves for a narrative play. And this, I don't think this is any different of why this happened when it did. And this being a talking point for all the stuff coming up here in November.
Right.
So buckle up, everybody. Okay. We'll come back to this. I think this will be something. I guess one thing we wanted to hit, Rabih, really quick while we're talking about Apple, and I think a principle we wanted to talk about here is the concept of business-specific risk. You were saying before we jumped on, where is Apple year to date right now?
I just pulled up the dashboard. Apple year to date is negative 11.53%. The S&P 500 year to date is 9.7%.
It's a 20-point swing.
Yeah, Apple is 5.6% off the S&P 500 in terms of like its weight. It constitutes 5%. If you do the math, like the return of the S&P versus return of Apple versus the weight that it's in, Apple has contributed to a negative 81 basis points, so 0.8% to drop from the S&P. So if the S&P did not have Apple this year, the S&P would be 0.8% higher. That's it.
Got it.
Which is a very small amount given that Apple is down 11% while the market is up 9%. But those are the numbers for you, Matt.
Yeah. I think I'm going to get Rabih a t-shirt or something that just says, if you do the math, ...
I'll make it happen.
Yeah. If you
we need to have merch, you guys. I'm going to say that all the time until this podcast has merch.
If you do the math, Rabih needs a tattoo that says that.
And now it's a tattoo.
Yeah. Oh, sorry. T-shirt tattoo.
On my forehead.
I'm thinking like a nice chest piece or something. I don't know. Just in old English, right across the chest. If you do the math, something like
Matt
that.
is gonna kill my dating life. Like completely. If you do the math, I will get no women.
I actually think it'll only make it better. So we'd hit a couple of these companies too. Like, we won't go into all of them, but basically some large companies, right? Apple being one of them, being the biggest right now, of being a 20-point swing compared to what's happening in the market. And it was just, again, a good reminder. If we're going to talk a lot about these big companies driving market performance, right, as this big narrative around like the Magnificent Seven driving the whole market, it's like, well, this also works on the other side, right? Diversification works over time. And this is why we're saying we very much advocate for 99.9% of people should not be dabbling at all in individual stocks. Or I won't say that. It shouldn't be your main strategy. If you want to play with it on the side, have some fun with it, awesome. But the way you invest in stocks matters. And we just fully believe that it's too easy to be diversified now. You do not need to be messing with individual stocks for the most part. Yeah. So, okay. Any other final thoughts on that before we go to the biggest, most important topic of all?
No, let's do it.
Okay. So I don't know if you guys knew this. I totally did. I totally knew this. I totally knew this. I track it all the time, whenever it happens. Every time it happens. Mercury's in retrograde. I don't know if you guys knew this. So again, I did. And it's like my kids' birthdays. Who told you that? It's like my kids' birthdays, and then this is basically what I'm tracking all the time.
Yeah.
So the question is, with Mercury being in retrograde, because we all know what that means, should you be worried about your investment performance? That's the biggest question I have when I found out.
Yeah, right.
So let's first start with Victoria. What the heck does Mercury in retrograde even mean?
Well, I now know.
Okay, now you know. Got it.
Yeah, now Mercury being in retrograde was brought to my attention a little bit ago. So it's happening from April 1st to April 23rd. Yeah. And right. I mean, you could have told us that, Matt.
Totally.
Yeah. And basically all I really knew about it, and I'll admit this, was that it kind of just like messes with energies, or it's supposed to, and it's supposed to be kind of this like bad, like 3-week period thing. And so that's kind of all I went with, was like, oh my gosh. But I actually did my research, so now we can all know. So Mercury in retrograde is a visible astronomical phenomenon from Earth, and basically because we're on like different orbits, Mercury and Earth, like, I guess, cross at one point. And so instead of Mercury going east to west, it switches from west to east. And because Mercury is like the planet of, is it like Hermes or something? And Hermes is like the god of like messenger or whatever. So it's supposed to mess with information, communication, boundaries, and all of that. So one of the things that you're not supposed to do, allegedly, with Mercury in retrograde, and I know you're really passionate about this, Matt, is you're not supposed to travel, and we don't have to get into the details, but basically 2 of the 3 of us here have experienced crazy travel stories in the last 24 hours.
Yeah.
My flight to Phoenix was actually the most insane flight I have ever been on. I've never been on a flight where they're like, we need a doctor on board, or like, where are the medical professionals? And that happened. And then Rabih like had a train incident in Salt Lake City. So I'm just saying.
To be fair, let's give the people the context. When they brought the doctor on, they were yelling they need a doctor for the airplane. It's because of the deranged woman named Victoria yelling, Mercury's in retrograde. Right? Mercury's in retrograde. We shouldn't be on this plane. Is that kind of, like, we need to tell the truth of what's actually happened.
You're right. I do love me a good chaos story. So
that's not really what happened. Okay.
It's my fault. Totally. Yeah. No, everyone ended up being fine, but this poor man like passed out, and it was a horrible scene, but ended up being okay. We got paramedics and all of that, but it was insane. It truly was. And then Rabih has his own story of having to, it take you like 2.5 hours to get home, Rabih?
Yeah, 2.5 hours to cross 16 miles. And on public transport, I couldn't get to my station because 2 stations down, a guy shot 2 people and they had to block it. So it was a funny moment. They just told us, get out of the tracks. It's called tracks here in Salt Lake. Get out of the tracks. It's going to do a U-turn. There's going to be a bridge bus coming to pick you up. 45 minutes later, no bridge up is there. We're like 200 people stranded in a bus station. The police comes and arrests a bunch of us. I don't know why. They're like still looking for suspect.
They were arresting people?
They did arrest someone in front of us. I got tired and bored, so I just ordered an Uber.
It wasn't exciting enough for Rabih.
No, yeah. I come from Lebanon, guys. This is this is
another day in the life.
Yeah, Rabih's like, this is a Tuesday.
Yeah.
Yeah.
But it said you can't travel. It didn't say you can't invest, right?
Well, okay, I'll get to it, but basically, I'm just trying to kind of I'm trying to tee
You're
this
trying to
up,
set the
Robbie. I'm
stage of how serious this
setting
is.
the stage, and people need to take this seriously. Okay?
Totally. Yes.
So then I was thinking, since this crazy stuff happened, does Mercury being in retrograde have an effect on the stock market? And guess what? It does.
It does.
But at any time, okay, me being the study buddy, I feel like I should clarify. Anytime you have a study, like that's it, right? Like the numbers are just the numbers, and our job is to tell a story based on that. And you can tell virtually whatever story you want. So I'm going to go with what I am going to tell.
I'm glad you at least admitted that. Yeah.
What? No. This is actually really interesting stuff. Rabih was really nervous about me talking about this, but there's actually, it's pretty cool. So there was a legitimate study that took in 48 countries between 1973 and 2019. Okay. So it's not just the US. It's like, this is a decent amount, right? And so they wanted to know, like, does this have an effect? And so it actually does. So, blah, 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 blah. What does it say here? We find that market returns are 3.22% annually lower during the Mercury retrograde period than during the remainder of the year. So there is some significance that, that it affects this. But then, Rabih, just let me cook, okay?
Let her cook, Rabih, and then you can poke
So
some
that's
holes.
the number. That is the number. It is the truth that like the markets do worse during this period.
Wait, really quick. Mercury retrograde happens twice a year?
Like 3 or 4 times a year.
Oh, okay. Wow.
What?
Okay.
Oh,
no, that's
funny
a lot.
that you asked that, because I'm pretty sure.
Yeah, it's also happening in August and December. I had to look into the math.
Got it.
Rabih's always going to doubt me, but that's fine. I'm used to it, and I can stand up for my own. So, let's get into it. So that's the number, right? And so, of course, we kind of want to figure out why this is. So the study goes further. I promise you, Rabih, this is a legitimate study. I wouldn't bring this.
I'm not interrupting you. Go ahead.
I know, but it's just your face, okay? I'm just not going to, I'm going to have to
just
cover.
His face.
I know.
His face alone.
You just, if nobody's ever met Rabih in person, you could just feel it when he looks at you and you're like, he's doubting.
It's so true. It's so true. It's so funny.
I'm used to it.
He's just sitting there keep going, Victoria.
He's like, yeah, okay, you guys, come on. This is
okay.
Really
we're listening.
stuff.
We're listening.
Okay.
Go ahead.
I'm genuinely listening.
Thank you, guys.
Rabih, keep your face neutral.
Yeah.
Cover your face up. There you go.
Oh, that actually makes this worse. Don't cover your face. Okay, I'm gonna go. So basically, they said, okay, cool. So markets do worse during this time period. They call it the Mercury effect hypothesis. So this is a legit thing. So the study went further to kind of figure out what's driving that, what's motivating it. So they distinguished it between the belief channel and the real effect channel. So let's see. Let me pull up the real effect. So the real effect that would be, it's the astrological belief of Mercury retrograde is correct. Like Mercury in retrograde has tangible effects on decision making. And so the way they tried to figure this out and test it is they looked at traffic and commerce related activities, because Mercury in retrograde is supposed to affect these things. I'm nerding out. It's so cool that someone actually did this, you guys. So they used we used the traffic accident to proxy for traffic related activity and the amount of fundamental loss to proxy for the commerce related activity, and they find through that the effect of Mercury in retrograde in traffic accidents is negative and inconsistent. And they even looked at cash flows for this type of industries and whatnot. And so the real effect is not a thing. So there you go.
There is no real impact in real terms, is what you're saying. Say what you just said again. The belief and then the actual just looking at cash flows and if if accidents go up and if that is not the case.
Commerce related industries and all of that, there is no effect on those companies' cash flows.
Now let's get to the humans.
Let's get to the humans. So now they test the belief channel if investors basically influence this. And that's really where this is all coming from, right? So the belief channel, it's investors believe that they will make more mistakes during Mercury in retrograde. You're like not supposed to make like important decisions. And so in order to avoid making mistakes, they'll like pull out of the markets basically. And so I think that's what their kind of position is like, basically you're kind of going in the realm of market timing.
It's a
And that's
self-fulfilling prophecy.
it's a self-fulfilling prophecy. Yeah. So they tested it in a couple of different ways. So in one way, they used a country's average daily return in the previous year's Mercury retrograde, and compared that. And they do find that there are negative effects with that. And then they also looked through Google searches and to see like if there are more, if there's a country who puts more asks Google more about this, they're also a lot more likely to experience negative effects in stock returns. So basically what they're finding is for groups or countries or people who have this belief and they use it to make decisions about their portfolio, like pulling out of it, that's what's really driving negative returns there. And for people who stay in their seat, this is a really good time because then that's driving prices, down. And so they went into this whole, like, you now have like a higher risk premium and you get paid out for that. So I thought it was really cool, you guys, that basically sit tight. And while everybody else is freaking out about Mercury being in retrograde, me included, but I'm not moving my stock portfolio because Rabih.
And you traveled.
Rabih would end our friendship, I think. But yeah, sit tight. It's a good time to be invested, I guess.
Victoria just has an automatic Slack message that goes to Rabih, basically right on the dates of all the Mercury retrograde times, and it just goes, "All right, time to sell. Okay, time to buy back. Time to buy again." He just has it. She has it all down.
No, I do not.
It's showing my battery being low. My computer might die here pretty soon.
Oh, perfect.
Actually, Rabih, I'm gonna grab my charger.
We'll fight.
You guys fight about it.
Okay.
Okay.
So what do you think? I'm genuinely curious, Rabih.
All right. So I'm nothing personal here. I'm gonna preface with that.
So it's about to get personal.
No. I'm just gonna represent while I do believe with the end conclusion that you should stay invested the whole time. I'm gonna be representing the side of the population that does not buy it to start with. Okay. So I'm gonna give you a couple of analogies that I think are fairly important. There's a lot of studies showing how March Madness, like the month where March Madness happens, people are so distracted and they are so unproductive that it actually affects productivity, right? And this is true only for basketball fans, right? It's not because March Madness itself as an event brings productivity down. So that's the first point. Like Mercury retrograde might impact mood and impact people only for those who are gonna follow a retrograde.
They don't even know it's a thing. Yeah,
they know what it is. That's
like
the first
Matt.
point. The second point, and it's another analogy, it's not related to the March Madness, is actually related to elections and stock market performance. We're going to talk a lot about it by the end of this year when the general election is about time. But we did a podcast, Matt, Ryan, and I, during the midterms 2 years ago, and it showed that the stock market during Democrats' terms did much better than during Republican terms. And the worst two were during George Bush II and Richard Nixon. The stock market actually went down in their terms from they first joined until they left. And just people would now extrapolate this, pull it out of proportion and say, oh, the Democrats are better than the market. But they did not take into consideration that coinciding with the timing of when George Bush and Nixon were in office, we had the global financial crisis of 2008, and we had the fall of the global currency regime, Bretton Woods system, where the US dollar was pegged to the dollar in 1971, and they removed that peg, and as a result of that, the markets had to like find the new equilibrium in this new macroeconomic system. So an event happened. It did cause the US stock markets to be lower, but it was not because of a president. It was because of a macroeconomic event that coincided with that period. So my second question is, for those people who believe in retrograde, what else was happening during the 2-week period when it was happening that would have actually caused a bigger impact on productivity and on general mood, and if we want to go even further, on like a stock market performance during that period? For me, honestly, I know it's been a month. I still haven't recovered from daylight saving. I think that impacted my mood much more than a Mercury retrograde. So all I'm saying is, like, one, it's only affect the people who will believe
It would be affected.
who think that it's relevant to them, and two, it has to be the only cause. It shouldn't be coinciding with other factors that we are disregarding. But when it comes to the general conclusion at the end that yes, we should stay invested, I 100% agree.
Yeah, I just think I love that. That was like really great to bring in. I guess our portfolios are just not the place for bringing in our moods and emotion.
I'm gonna start a whole new fund called Mercury Retrograde Fund.
Yeah.
No, there's this. We all know this, right? You're researching a car, right? Let's say you're in the market for a new car, and you pin it down to a couple options. Or you pick one kind of style or whatever car that you want. What do you then see for the next several months after that, even if you're just in the research mode?
The same car everywhere.
The same freaking car. This happens to me every single time, right?
Yeah.
I just bought a car 3 or 4 months ago. I was looking at one car for several weeks after. I'm a very slow processor of decisions like this, and so I went through this whole process. All I could see was that car.
Yeah.
And I decided to flip. And I was like, I'm going to do this other car, the car that I ended up buying. And all I could see, and even now, it's been at least 3 or 4 months. All I can see is that car. I think this is kind of the same effect with what you're talking about, Victoria. We tend to do this, to your point, and it actually makes a lot of sense that you're saying the behavioral side of things, but people believe in Mercury retrograde actually impacting things in their life during that 3-week period. So what are they going to be aware of? All the things that are happening that are negative.
Yeah.
This is just our brains playing tricks on us.
Yeah. Well, I think if we had more time, I could go into like the full study, but basically what it was kind of also suggesting at the end is like how much like culture and beliefs and all of that like play a role in people's decision making in general. But then when you decide to take those at face value and use it to make investment decisions, that's where this becomes really dangerous. So yeah, I know it's funny that we like brought up Mercury in retrograde, and unfortunately Rabih and I had some really bad stories, and hopefully I make it back home safe tomorrow night. We'll see. I'll let you guys know the next time I'm up here. But really, I think that was kind of the point of the research, is just to say, like, you know, cultural impacts, belief, culture, your beliefs, your values, like those are great. But be very careful if you're using that to make like big investment decisions, right?
Yeah.
So maybe don't let astronomy affect your investment decisions.
That's probably a good takeaway from this. Don't let planets moving and rotating around each other have any impact on any decision you're making, really.
Yeah, like don't even get me started. Like Pluto's actually in retrograde too, and I didn't even bring that up.
I didn't know that.
Oh,
that changes
funny.
Everything.
It does. You know, if we had more time, I'd go into how that affects everything.
I only track Mercury. I didn't know I had to track Pluto as well.
Yeah, we got how many planets in our solar system? I don't even know, to be honest.
It used to be 9. Now I think it's 8.
8?
Something like that.
Oh yeah, we like.
Isn't Pluto not even a planet anymore?
I don't even know.
I don't know. I'm not even sure.
But Pluto was also in retrograde at the same time.
I'm pretty sure Pluto got downgraded. I'm pretty sure they got the boot. I think the other planets voted Pluto off the island.
Pluto will always be a planet in my mind, you guys. Let's just leave Pluto alone.
I think it's just a large star or something, or a moon. I can't remember.
It's a dwarf planet.
There you go. Can we say that? I don't know if you can say dwarf anymore.
I don't know, Matt. I'm not the word police.
I'm just kidding. Okay. All right. Anything else? Any final thoughts on planets or any of this? No?
Nope.
Okay. All right. Do you want to come talk to us about this? And as Victoria said, look Rabih in his face, see him in person, and have a conversation with them, and realize whether what you're saying is agreeable to him or not. He will tell you again with his face. You should come see him in person in Park City in June. Did you guys see what I did there? I'm trying to transition this very well, but
That's great.
Park City Dentist Money Summit.
It's what the expense though.
Now people are going to be afraid to meet Rabih.
You should not be afraid to meet Rabih. He's
No,
one
I'll
of the
be there.
funnest people on the planet.
Oh, yeah. Yeah.
Victoria as well. I will also be there. June 21st, 22nd in Park City, Utah. Dentist Money Summit. How many days out are we, Victoria? We're like 75 days
I
out
think
now.
we're like 76.
76, 75, something like that. So definitely check it out. We are so excited to have that. But for now, that was our 2 cents. There's only one thing left to do. Let's go forth and live your rich life. Have a great weekend. Bye-bye.